Welcome to the Deep Dive. If you're just stepping into a new role on your Methodist Church of Southern Africa Society's Finance Committee, or maybe taking on treasurer duties, well, you might be feeling a mix of things. Excitement, maybe a little overwhelmed.
Oh, absolutely. That's perfectly normal. There's quite a bit to get your head around, isn't there? From the financial guidelines to just making sure everything runs smoothly day to day. But look, don't worry. That's exactly why we're here, to sort of unpack it all.
Exactly. Think of this as maybe your guided tour through the really essential bits of your new role. We've spent some time digging into the policy on effective financial management.
That's the key one.
Yeah, and pulled out relevant stuff from the Methodist Book of Order and, tried to make sense of those important financial schedules and governance checklists.
Right.
So our mission today, it's pretty simple, really, just to give you a solid foundation so you can feel, well, confident and effective managing your society's finances.
Yeah, we want to get you past that feeling of being swamped by all the details. We want to equip you with practical insights. What are your key duties? What do you actually need to do? Helping you become effective stewards right from the get-go.
Okay, let's do it. Let's unpack this, starting with, I guess, the absolute foundation of it all. Financial reporting and accountability.
Yes.
And there's this core principle that just keeps coming up, and it's there for a really good reason. This idea of being found trustworthy.
Ah, yes. 1 Corinthians?
Exactly, 1 Corinthians 4.2. And it's stated very clearly in the policy on effective financial management, too.
That's really it, isn't it? It's not just about making the numbers balance, though that's important. It's fundamentally about the trust your society, your church community places in you.
Yeah.
Trusting you to manage their contributions responsibly.
Right.
And you maintain that trust through consistent, timely financial updates. The policy, it requires regular statements, monthly, quarterly, and then the annual ones. And those annual ones, depending on the society's income level, might need to be audited or reviewed or compiled or sometimes just verified.
So different levels of scrutiny.
Exactly. Think of these regular reports like an early warning system. They help you spot small issues before they mushroom into big problems. And that builds confidence within the society.
So it's definitely not something you just do once a year, file it and forget it.
Oh, definitely not.
Yeah.
No, that regularity gives you transparency. And it supports good decision-making right through the year. The policy also emphasizes keeping simple accounting records.
Which sounds obvious.
It does sound obvious, right? But having a clear, straightforward system makes transitions so much easier. When committee members or treasurers change roles,
Good point.
nobody wants to inherit a complete financial puzzle. You want something you can actually pick up and run with.
That is so practical. And these reports, they aren't just staying within your local society, are they?
Correct. The financial information you're managing locally, it plays a really vital role in the bigger MCSA picture. It feeds into decision-making by executive committees, by the Synod, and crucially by the Methodist Connectional Office, the MCO.
The central hub.
Exactly, the central admin hub for all the Methodist churches in Southern Africa. So your reports, they contribute to this broader understanding of the Connection's overall financial health. Your basic duty, it's managing the funds well, keeping those accurate records we talked about, and then submitting them for the necessary approvals at the different levels.
Now, let's talk about the circuit level. For anyone new to the MCSA structure, a circuit is basically a group of local societies.
That's it.
So how do the financial responsibilities get shared within that circuit structure? I know circuit stewards are involved.
Yes, absolutely. The Book of Order clarifies this. It says the circuit stewards manage the circuit's shared funds, and they do this on behalf of the quarterly meeting.
Which is a key meeting for the circuit.
A key decision-making body, yes. So, as a society treasurer, if you're dealing with finances that affect the wider circuit, you'll generally operate under the guidance of those circuit stewards.
Okay.
And there's another layer. The superintendent minister has an important oversight role. They need to make sure that all the funds held by any group or organization within that whole circuit are reported to the quarterly meeting.
So it's really about everyone being in the loop, total transparency.
Transparency seems to be the watchword here, yes.
Okay, timing. What about the timing of all this reporting? When does the financial year actually end?
The guidelines for those financial schedules, 4D, 4C, 4S, are very specific. The financial year for everyone ends on December 31st.
Right, easy to remember.
And a core responsibility, probably the core reporting task for any society that has its own bank account, is completing that annual financial schedule. We call it the 4S schedule.
The 4S. And what kind of information actually needs to go into that 4S schedule? Is it just income and expenses?
It needs to be pretty comprehensive. You have to detail all the income the society receives and all the money it spends. That includes everything, regular offerings, sure, but also any stipends paid, allowances, honorariums, donations, even specific gifts given to ministers.
Wow. Okay. Very detailed.
And crucially, you also have to clearly state all the balances in all of your society's bank accounts.
It sounds like trying to leave anything out could land you in hot water.
Exactly. The policy on effective financial management says, quite explicitly, that withholding financial information, or even just not telling the MCO about all the bank accounts you're operating, well, that will be taken very seriously indeed.
Okay. Message received.
There's a real emphasis on making sure everything is out in the open, accountable.
What about, say, smaller groups attached to the church? Maybe a youth group does some fundraising, or a women's ministry has its own small account for activities.
Good question. Any organization that's officially part of the society, they have a role too. They need to get their financial information, their income, their expenses, their balance to the society steward or the treasurer.
So it can be included.
Yes, so it can be included and disclosed within the main society's 4S schedule. It's all about getting that complete financial picture at the society level. No hidden pots of money anywhere.
Makes sense. Now, sometimes, hopefully, a society takes in more money than it spends. Other times, maybe things are tight and it spends more than it brings in. What happens with that surplus or deficit? How's that handled in the forms?
Right, that's where this idea of excess income or expenditure comes in. The guidelines explain how this figure is calculated, and then it gets carried forward. It goes into what's called the state of account section in the financial schedules. So if you had a surplus, great. It adds to your society's accumulated funds for the next year. If you had a deficit, well, it reduces them. The schedule provides a clear way to track this from one year to the next. And it all feeds into calculating the final figure, the accumulated funds as at 31 December.
Okay, right. That gives us a pretty good handle on the reporting side of things. Let's switch gears now and talk about the practicalities, handling the money day-to-day, banking, and how you actually spend the society's funds.
Yeah, the nuts and bolts. And this is where that governance checklist becomes a really useful tool for new treasurers especially.
How so?
Well, it asks specific questions, prompts, really, that guide you on best practice. For instance, it'll ask, is all the income being banked according to the PEFM, the Policy on Effective Financial Management?
Right.
Is the money coming in regularly checked against what's actually hitting the bank account? Are collections from special events like a fundraising dinner, are they properly recorded and accounted for separately?
So it's like a self-check.
Exactly.
Yeah.
And it covers how you pay for things, too. How should the society actually make payments? Are there preferred methods or things you need to be careful about?
Yeah, like, can we just use a debit card? Or internet banking?
Well, the checklist raises questions about using checks, definitely internet banking, and debit cards. But importantly, it also asks, has the use of internet banking and debit cards been specifically approved by the quarterly meeting?
Ah, okay, so it's not just automatic?
No. That really flags up that there's a governance step involved in how you use these payment methods. It's not just about what's easiest or most convenient for the treasurer. It needs formal approval.
Right. So any move to, say, primarily online banking or regularly using a society debit card needs that formal quarterly meeting nod.
That's the guidance, yes.
What about when the society needs to make, larger purchases or maybe undertake some bigger projects, repairs, that kind of thing?
Good point. The PEFM, and this is reinforced by the governance checklist, it requires you to get at least 3 different quotes for any significant expenditure. And the guideline figure there is generally over R5,000.
3 quotes over R5K.
Yes. It's a really vital internal control. It helps ensure you're getting good value for the church's money, and it helps prevent, potential favoritism or unauthorized spending.
Makes sense.
And similarly, for any parents made electronically internet banking, for example, the PEFM mandates dual authorization.
Dual authorization, meaning?
Meaning more than one person needs to approve the payment before it goes out.
Oh.
Typically 2 signatories or approvers. It adds another really important layer of security. You don't want one person having sole control over electronic payments.
Those sound like really smart, practical ways to safeguard the funds. What about just managing the bank accounts themselves, keeping track?
Monthly bank reconciliations, absolutely essential. Non-negotiable, really. The governance checklist specifically asks about this. You need to regularly, every month, compare your society's own financial records, your cash book or accounting system, with the bank statements. That helps you catch any errors, any bank charges you weren't aware of, or any discrepancies nice and early. Keeps everything accurate.
And presumably paying the bills on time.
Absolutely. Making sure that assessment payments, the amounts your society owes to the circuit, and the amounts the circuit owes to the MCO are made on time. That's a key responsibility flagged in the checklist, too. Keeps the whole system flowing.
Are there any financial activities that are definite no-go zones? Things new treasurers should be particularly aware of that they just shouldn't do?
Yes, the Book of Order is very clear on a couple of big ones. Circuits, societies, or any related church organizations are strictly prohibited from overdrawing their bank accounts. No going into overdraft.
Right.
And they're also banned from entering into any hire purchase agreements, buying things on credit over time, unless they get express written permission beforehand from the general treasurers at the MCO.
Okay, so no debt without specific high-level approval.
Basically, yes. It's to prevent societies getting into unsustainable debt situations. The PEFM also gives some positive advice. If the society has surplus funds, money that isn't needed for immediate expenses in the near future,
Yeah.
it should ideally be moved, transferred into a bank call account or maybe some other suitable low-risk investment account, just so it can potentially earn some interest, rather than sitting idle in a current account.
That makes perfect sense. You don't want the church's money just sitting there doing nothing if it could be working, even modestly, for the society.
Exactly.
Yeah.
And just to hammer this home again, because it's so important, all bank account balances must be reported. No exceptions. Reported to the relevant authority, usually via the 4S schedule.
Got it. What about regular running costs, administrative stuff?
Well, the policy mentions quarterly administration grants. These are funds that might come from the circuit or district. But it states they should only really be paid out if the society genuinely doesn't have enough of its own cash resources to cover those essential admin costs.
So it encourages self-sufficiency first.
That's the idea. And more broadly, there's just this ongoing expectation, this principle, to always be looking for ways to save money, to avoid any spending that isn't really necessary for the mission and ministry of the church.
Prudent spending?
Prudent spending, yes. And at the same time, you need to keep a close eye on all the expenses going out and, crucially, make sure all the income you budgeted for is actually coming in. It's about being really careful and responsible with the resources God has provided through the members.
That focus on income naturally leads us back to talking about those annual financial schedules again, specifically the audit, review, or verification process that happens at year-end. Who exactly is required to submit these schedules? Is it just societies?
No, it's broader than that. The guidelines clearly outline it. Every connectional unit, each district, every circuit, and yes, any society, or even sometimes a specific section within a society if it operates its own bank account, is required to complete an annual financial schedule. And that schedule will be one of the ones we mentioned, a 4D for districts, a 4C for circuits, or the 4S, which we've talked about, for societies.
Right. So for our listeners focused on the society level, it's the 4S they'll be dealing with.
Predominantly, yes.
And what sort of paperwork needs to be gathered together for this whole audit or review or verification process? What will the accountant or auditor ask for?
Well, whoever's doing that, checking the auditor, the compiler, the reviewer, the verifier, they'll need certain key documents. Usually that includes all your bank statements for the year,
Okay.
your records of income and expenditure, like your cash book or accounting printouts, maybe a list of any significant assets the society owns, property, equipment, and definitely documents that support major financial transactions like large invoices or grant agreements, basically the evidence behind the numbers.
Now, we've used these terms quite a bit. Audit, compilation, review, verification. They might sound a bit technical to someone new. Can you briefly explain what each one means in practice and who is actually qualified to carry them out?
Yeah, that's a really important distinction to grasp. Let's break it down. An audit is the most thorough level. It's an independent examination of your financial statements by a properly qualified auditor. They look at the evidence, test transactions, and then give a formal opinion on whether the statements present a fair and true view of the society's finances. It offers the highest level of assurance.
Okay, that's the top level.
Right. Then you have compilation. This is much less involved. Here, an accountant takes the financial data you provide and basically puts it into the standard format of financial statements. They don't offer any assurance on whether the information is accurate. They're just presenting it correctly.
Just formatting.
Largely, yes. Then review sits somewhere in the middle, between an audit and a compilation. The accountant will ask some questions, perform some analytical procedures, do some checks, but it's not as detailed or deep as a full audit. It offers what's called limited assurance. It's more than a compilation, but less than an audit. And finally, verification. This is typically used for smaller entities with lower income. It involves someone with a suitable accounting background or qualification, checking the basic accuracy of your records and financial statements, confirming things tie up.
So like a basic check for accuracy.
Kind of, yes. Think of it like this. Audit is the full financial health check with a doctor's opinion. Review is maybe a less intensive checkup. Compilation is getting your health information organized clearly, and verification is just making sure the basic numbers add up correctly.
That's a helpful analogy. And the level needed depends on the society's or circuit's income, right?
Exactly. The rules are quite specific based on annual income for societies with income over R3 million.
Okay, the larger ones.
Yes, the larger ones.
Yeah.
They require a full audit. And that audit must be done by someone registered with IRBA, that's the Independent Regulatory Board for Auditors. They're the official body overseeing auditors in South Africa, making sure they meet professional standards.
Got it. R3 million plus equals IRBA audit.
Correct. Now, for societies with income between R1 million and R3 million, the requirement is less stringent. Their financial statements need to be either compiled or reviewed.
Okay, one of those middle options.
Yes. And the person doing that compilation or review needs to be registered with one of the professional accounting bodies. SECA, the accountants and auditors,
Yeah.
CI, the professional accountants, or SEBA, the business accountants.
Right, so a registered accounting professional.
Absolutely.
Right.
Precisely. And then for circuits, this applies at the circuit level with income under R1 million. They don't typically need a full audit or review. Their records usually just need to be verified.
Verified.
And that verification needs to be done by someone who holds a suitable accounting degree or diploma. They need to have some formal accounting knowledge.
Okay.
And it's also worth noting the MCO, the Methodist Connectional Office, they actually reserve the right to query or accept or even reject the qualifications of anyone performing these tasks. They want to ensure standards are maintained across the board.
It sounds like there are really clear professional standards depending on the scale of the finances involved.
There are. It's structured to provide appropriate oversight based on the level of funds being handled.
So once these schedules are done and they've been audited or reviewed or whatever level was required, what's the journey then? Where do they get submitted?
Right, the submission process. The policy on effective financial management lays out the steps pretty clearly. For a local society, the completed signed-off statements first go to your church council or perhaps your leaders meeting. They need to approve them locally.
Okay, first local approval.
Yes. Once approved there, they then go up to the circuit quarterly meeting for approval at that level.
Right.
From the circuit, they're then forwarded, usually via the district treasurer, to the district synod. And ultimately, they all end up with the MCO compliance unit. That's the final destination.
So a clear chain of reporting upwards.
A very clear chain. And the Book of Order also mentions a specific time frame. If schedules like the 4C circuit or 4S society are outstanding, the bishop can issue a notice, and they then have to be submitted to the finance unit within 30 days of receiving that notice.
Wow. Okay, so there's a mechanism to chase things up. What happens if, for whatever reason, these schedules just aren't submitted on time? Are there, real consequences?
Oh, yes. There can be quite significant consequences. The Book of Order is unambiguous here. Failing to submit schedules on time can trigger a pastoral commission investigation into the circuit's affairs.
Oh.
Or, in more serious or persistent cases, the district could actually be authorized to step in and take over the administration of the circuit's finances entirely.
Wow.
And if those requirements still aren't met within a year, the presiding bishop actually has the authority under the Book of Order to reorganize a circuit, maybe combine it with another one, or even, in extreme cases, disband it altogether.
Gosh, so getting these reports done accurately and submitted on time is, well, it's really critical. Not just good practice, but essential for the health and even the existence of the circuit.
Absolutely critical.
Yeah.
It underpins the accountability structure of the whole connection.
Okay. Let's move on to another really vital area, especially for a finance committee: budgeting and financial planning. This is where the committee gets to be really proactive, isn't it? Guiding the society's financial future.
Absolutely. This is moving from just recording the past to actually planning for the future. The policy on effective financial management clearly states that finance committees are responsible for Yes, managing funds effectively and keeping records, but also presenting financial plans and budgets for consideration and approval.
So shaping the direction.
Exactly. When you sit down to put together a budget, one of the very first practical things to do is to double-check. Verify the expected ministerial stipends and any allowances with the general treasurers at the MCO. You need to make sure your figures for clergy costs are accurate.
Gotta get those key numbers locked down first.
Yes. And if your society happens to support any students, perhaps theological students, their expenses, fees, maybe accommodation if applicable, those also need to be carefully factored into the budget. Don't forget them.
Okay. What are some other key things people should be thinking about when they're drafting that annual budget?
Well, you need to be realistic about inflation.
Mm.
You have to account for any anticipated increases in regular costs. Think municipal electricity rates, water, maybe postage, telephone, or internet costs. These things tend to go up.
Yeah, they rarely go down.
Exactly. Travel expenses, if they're significant for ministry, should be realistically calculated based on the necessary journeys expected in the year ahead, not just plucked out of the air.
Makes sense.
And the policy actually emphasizes something quite important about the goal of budgeting. Your budget exercise should aim to either have an excess of income over expenditure or surplus, or at the very least to break even.
So plan for a surplus or break even.
Yes. You definitely want to avoid planning to spend more money than you realistically expect to receive.
Yeah.
That's planning for a deficit, which is generally discouraged. Think of your budget as that financial roadmap for your society's mission and ministry for the year.
Good way to put it.
It's not just about tracking expenses passively. It's about strategically allocating the resources you do have to support your key activities, your priorities.
And is creating the budget just a once-a-year task? Set it and forget it.
Ideally, no. Again, the PEFM recommends preparing income statements, comparing budget to actuals quarterly, or even monthly, if the society leadership agrees it's helpful.
Okay, regular check-ins.
Yes. These statements compare what you budgeted to happen with what actually happened regarding your income and your expenditure. And critically, they should highlight any significant differences or variances.
And what happens with those variance reports?
Well, those income statements, along with clear explanations for any major variances. Why did we overspend here? Why was income lower than expected there? They should be presented regularly to the relevant church body. That might be the finance committee itself, or the leaders' meeting, or the church council. Presented for discussion and approval. People need to understand why things are differing from the plan.
Right. Keeps everyone informed.
Exactly. And then, of course, at the end of the financial year, you'll also need to prepare the full annual financial statements, which must include a balance sheet showing assets and liabilities for final approval.
Okay.
And just two other points on planning. That institutional competency assessment we might touch on later, it actually asks about having a current 2-year funding plan. So looking a bit further ahead.
Longer-term view.
Yes. And if your society happens to have significant investments, it also mentions that a trustee committee or similar body should be regularly monitoring how those investments are performing, making sure they're being managed well.
Okay, that covers budgeting and planning well. Finally, let's just touch on internal controls and governance more broadly. For new committees and treasurers, how can they make sure they're operating in a way that's both effective and, ethical? Protecting the church's resources.
Right. Well, we've already mentioned it, but that governance checklist is specifically highlighted in the guidelines as a way to enhance or strengthen your internal controls. It's a practical tool.
Use the checklist.
Use the checklist. And the MCO can actually ask for copies of these completed checklists just to verify that societies are complying with best practices. It helps promote consistency.
Okay.
Furthermore, any separate institutions or trusts that might be connected to the church, maybe a school or a specific property trust, they generally need to complete an annual institutional competency assessment.
Right, you mentioned that. What does it cover?
It looks at several things. Their financial viability, yes, but also their adherence to ethical standards and how effectively they are being managed overall. It's a broader health check, and that assessment needs to be submitted along with their financial schedules.
I see.
And really, underpinning all of this, all these controls and checks, is the fundamental requirement stated clearly in the policy. You must comply with both the MCSA's own policy on effective financial management and all the relevant requirements set out by the South African Revenue Service, SARS. Tax compliance is part of good governance.
Absolutely.
And it's worth saying, these checklists and assessments, They aren't just meant to be bureaucratic hurdles to jump through. They are really vital safeguards. They help prevent the kinds of serious non-compliance issues and consequences that we talked about earlier.
Right. Speaking of consequences, it sounds like there's a really robust framework in place to support good financial management. But what are some of the most serious consequences if, despite all this, things go badly wrong? If regulations aren't followed?
Well, the Book of Order does outline some very significant repercussions, particularly at the circuit level. For example, if a circuit fails to meet its assessment payments, the money it owes upwards or other major financial commitments for 3 consecutive months.
3 months in a row.
3 months in a row, yes. It's stipulated. That circuit will lose control of its own finances.
Wow.
It will also lose its ability to have a say in which ministers are assigned to it, losing the choice of ministerial assistants. And it can even lose the right to have one of its own ministers serve as the circuit superintendent.
So, loss of autonomy, essentially.
Significant loss of local control, yes. And in that situation, the presiding bishop, after consulting with the local district bishop, can then appoint a special commission. This commission would be tasked with supervising the circuit's finances directly and also investigating its overall viability. Can it continue to function effectively?
Gosh, those are really serious measures.
They're serious measures, yes. And they're designed ultimately to protect the financial stability and integrity of the wider church when a particular part is struggling significantly or failing to meet its obligations.
Okay, that paints a clear picture of the importance of getting this right. So let's bring it back to the person listening who's new, maybe just appointed to the Society Finance Committee or just starting out as the treasurer, feeling maybe a bit daunted by all this. What would be your top pieces of advice for them?
Okay, top advice. Firstly, and this might sound basic, but honestly, take the time to actually read and try to understand the policy on effective financial management and the relevant sections of the Methodist Book of Order. Don't just let them sit on a shelf.
Get familiar with the rule books.
Exactly.
Okay.
These documents are your primary resources, your official guide. Secondly, and this is crucial, remember, you are not alone in this.
Good point.
There are resources available specifically to help you. The MCO Compliance Unit, for instance. They can offer clarification on any points you're unsure about. They might even be able to provide recommendations for suitably qualified auditors or accountants in your area, if you need one. Don't ever hesitate to reach out to them or your district treasurer with genuine questions. They're there to support you.
That's really encouraging to hear. What about within their own local church context? Who should they be talking to?
Ah, yes. Locally, open and clear communication is absolutely key. Work closely and build a good relationship with your circuit stewards. They have circuit-level financial oversight. Definitely maintain good communication with your superintendent minister, who has overall responsibility, and liaise with the NCO Finance Unit when needed for things like assessments or specific queries.
Teamwork, basically.
Very much so. And on a practical level, emphasize keeping meticulous records of everything, every rand in, every rand out, document things properly, and always aim for transparent reporting in all your financial dealings.
Yeah.
No secrets. And finally, perhaps the most important thing to remember is the ethical dimension. Remember the responsibility that comes with this role. Remember the significant trust that your church community, your fellow members, have placed in you.
That trustworthiness principle again.
Exactly. You are stewards of the church's resources given for God's work, and your faithful, diligent, responsible service in this role is absolutely vital. It's vital for the smooth running, the health, and the mission of your local society.
So as we kind of bring this deep dive to a close now, it feels like the key takeaways are really clear, aren't they? Being accountable,
Definitely.
ensuring accurate, timely reporting,
Mm-hmm.
following sound financial practices like getting quotes and dual authorization,
Yes, those controls.
and just diligently adhering to the MCSA's policies and procedures. All of that is just absolutely crucial for the effective management of your society's finances.
It really is. And these roles, treasurer, finance committee member, they are so important, sometimes maybe unsung, but vital. They directly support the mission and the well-being, not just of your local church community, but really the entire connection. Your commitment, your attention to detail in these areas, it ensures that the financial integrity that, frankly, underpins all the vital work the church does in the community, in the world.
Well said. And on that note, we do want to leave you, our listener, with a final thought to mull over. It echoes that really important principle we started with from 1 Corinthians 4.2. It is required of stewards that they be found trustworthy. So, as you step into your new roles, perhaps reflect on that. How can you, in your specific context, in your actions day to day, embody this principle? How can you contribute to building and maintaining a strong culture of financial integrity within your society?
That's a great question to ponder.
And please remember to continue exploring the documents we've mentioned, the policy, the book of order, the guidelines. Don't be afraid to dig into them. And always seek guidance when you need it. You're not expected to know everything on day one.
Absolutely. Reach out for help.
Thank you so much for joining us for this deep dive.